Thank you so much for joining us.
Well, thanks, Daniel. It's great chatting again.
Well, Keith, you've made our subscribers a lot of money. I get the emails every day. People are very happy. It's a very exciting show for everybody. We're going to get a great update from you. You just came out of the Sprott conference, and I know a lot of these conferences have been really dead over the last several years. Sprott even took this conference over from Agora. And what's the vibe? What was the mood at the Sprott conference?
Yeah, it was it was very, very refreshing. Actually, we were able to see and have visits from many of our shareholders from both companies. There's a surprisingly a large amount of First Mining Finance shareholders, and I think quite interestingly enough, many of these investors haven't really invested much in mining stocks in the past, and some of these investments that they're making are some of their keen first investments that they are making in this sector, which is really nice to see. And everyone's in a great mood. Everyone's making money, and they're keen to ask questions, and they just seem very supportive. And obviously, everyone's in quite a good mood. But the size of the crowds were amazing. There was I did actually do 3 presentations in a single day, and my first one of the day, I think I had close to 1,000 people in the room, and it was pretty exciting.
Well, I have to imagine you're like a rock star there with First Majestic Silver. People have seen 5 times their money this year. First Mining Finance, about 34 cents Canadian at the start of the year, and today it's around $1.10 Canadian. These are significant gains, significant value. For First Mining Finance, investors who would have gotten involved in the company last year, you guys started to acquire companies very aggressively. It was actually a hostile takeover. Now the company has a $500 million market cap. You've made many acquisitions. You have over 11 million ounces of gold resources. What is next for a company like First Mining Finance?
Yeah, well, thanks for that question, because it's really, interesting that what First Mining has actually achieved. I don't think there's not a single company on the planet that has done what we've done. We went out and went from 0 ounces to over 10 million ounces in a matter of 13 months by buying very aggressively some very good assets. And prior to taking this company public, I had my technical people review virtually every single gold mining company out there, and we had a short list of we created a short list of 60 targets, and of those 60 targets, we created 10, of our favorite targets, and of those 10, we bought 6. So, we basically bought 6 of the best gold assets there are in the Western Hemisphere, and with a very strong focus on Canada, or Eastern Canada, Ontario, Quebec, and Newfoundland. And, that's an enormous achievement. If you look at a map of Ontario, for example, and look at all the gold development projects that exist, we own virtually all of them except one. And when I mean that, there are majors, of course, active in the area. So for Junior to have, that many major gold assets concentrated in one jurisdiction is huge. And I think there's an enormous amount of value. And we looked at a number of criteria. We looked at infrastructure, we looked at land tenure, we looked at grade, we looked at economics. These are assets that would be economic today if they're actually in production. So these are very early cycle assets. They're not late cycle, meaning that they will be financed and they will become mines as the environment improves. And these will be big mines. The Springpole project itself will produce, when it gets up and running, over 350,000 ounces of gold a year. So, we just really have to focus on now telling the story. The website's being redone, our presentations are being redone, because what we've achieved, I don't think the market really clearly understands, because we just grew so quickly. Now it's time to step back and start really telling the story.
Keith, as the environment does change in a much better way for gold, the mineral bank, First Mining Finance, that you started, initially it was a mineral bank for all metals. And I know that you're probably still open to that. Right now, you've only focused on gold. But will you begin to look at some other metals, perhaps in 2017, like a zinc?
Mm-hmm. Well, actually, Daniel, we are looking at other metals right now. The gold sector has gone up a lot. I said we got 6 out of the our 10 best targets. The other 4, the valuations of those have gone up. Actually, one was bought by somebody else. So the other 3 that are basically left out there, their market values have gone up substantially, and they've come to a point now where it just doesn't make sense for us to be targeting those assets or those companies. So we're now looking elsewhere, and we're looking at some interesting copper assets. We're looking at some interesting zinc assets. So yeah, we're very much focused on that, and we're going to continue building our model. And whether we do another acquisition in the short term, it's really hard to say. But we've got a market cap of close to $600 million. So we've just closed a financing just recently, and we've got almost $40 million in the bank cash. So we're a pretty strong company, and we can do a lot with that market cap and that cash in the bank. So I think investors should be expecting us to remain aggressive going forward.
Keith, you've seen many of these cycles with the junior resource space, and of course you're a precious metal bug, no doubt. When it comes to gold, physical gold, we've got an all-time high for the interest in and investment demand for gold. And we've also got, I don't know if it's at all-time high right now, but it's at a historical high for the commercial banks being short. What is your opinion of what's going on with the gold price itself and the physical side of gold?
Well, I think everyone's just been simply caught off guard. I think that, earlier in the year, I was predicting, $20 silver by the end of the year and $1,300 to $1,400 gold by the end of the year. And lo and behold, within, a very few months, we hit those numbers. And that created, this huge short position where traders expected to see, a seasonal correction, and which we always do. You go back 30 years and you look at how the metals trade, and they always go down in May, June, July, and those 3 months tend to be the weakest months of the year, and you could actually trade off that phenomenon that seems to occur year in and year out, and even I was expected to see metal prices go down in June, and they didn't go down at all. There's been a couple of very shallow corrections. And so the shorts have never had a real chance to really cover their short positions. And that's creating this, I think, support underneath the market. We've got new buyers coming into the market as well. And we've got this pent-up demand under the market of all these shorts that are just waiting for this market to correct so that they can cover their short positions. So if we get through August and without any serious correction, metal prices always start to move in September, October, and that's going to be a really interesting setup, for these shorts, because they're going to have to start to come in.
For silver, you have made big headlines with your letter to the CFTC. I think it was over a year and a half ago now. Maybe actually it was late 2014. And you've also talked about triple-digit silver. So that people understand what is going on with silver supply. I mean, if silver goes to $30 or $40, does that fix and resolve the problems with future supply? Or is there a silver production opportunity, I guess, or problem that most investors are not acknowledging in the silver market when it comes to future supply and the future supply pipeline?
I think to really, really change the supply-demand fundamentals of the metal, you would need to have substantially higher metal prices. You would need north of $100 an ounce for silver, and then likely even, maybe 2 to 3 times that number. And it sounds silly, I know, but look, there are some very, very low-grade mines that have never been in production. And when I mean that, I mean 25, 30 gram per ton, which has never been economic. You would need triple-digit silver to bring those mines onto stream. And I'm assuming the metallurgy and is okay, and I'm assuming somebody would actually build them, which is another thing altogether. But nevertheless, at $50 silver, $30 silver, those numbers aren't large enough to change anything on the supply side of the market. We were there before, and we saw. When I put together First Majestic back, it's now 14 years, which is amazing how fast this 14 years has gone. But nevertheless, I did put the company together 14 years ago, and there was a handful of legitimate silver companies in the space. I thought it was a very niche sector. I love the supply-demand fundamentals of the metal. That's why I put together the company in the first place. But there was, a legitimate number of companies that could call themselves silver companies. And what I mean by that is companies that have over 50% of their revenue from the sale of silver. And I'll call any company that has that a silver company. So there was about a half a dozen. Today, there's literally a couple. And First Majestic is the purest in the world at around 70%. And the reason, and you can ask these individuals, that run these companies, it's Hecla and Coeur d'Alene and Pan American, and the name goes, the list goes on. But all these companies were at one point legitimate silver companies. And you ask them, and they say, well, we were forced to buy gold mines because there just simply wasn't any silver mines available to buy. And if we wanted to continually grow our business, we had no choice but to go buy gold mines. So now today, you really only have a couple companies on the planet that can call themselves true silver companies. And that tells me that silver mines are way rarer than people actually think they are. And it's still not priced into the market. And as you probably know, Daniel, we're mining 9-to-1, gold silver. So for every 1 ounce of gold, we're mining 9 ounces of silver, and we're trading somewhere in the low 60-to-1 range. And that, to me, is just absolutely ridiculous. And I think we will see a much, much lower ratio, closer to the ratio where we're currently mining.
Keith, last question. You have come out of these cyclical bear and bull markets. You've done very well for yourself and everybody who's invested with you. Many people today are not just investing because this is the birth of a bull market, but they're also looking at the US dollar. They're looking at the central banks, negative interest rates, Brexit. Judging by how bad the bear market was, and then also looking how amazing the fundamentals are for the precious metals, what are you expecting from this new bull market? Do you think this is going to be one for the history books? Because not only were we coming out of a brutal bear market, but we've never seen the negative interest rate policies around the world like we are. Literally, this has never been done before. So perhaps the fundamentals and the reasons to own gold have never been so strong. And we happen to coincidentally be coming out of a time when gold is at a low.
Mm-hmm. Yeah, my view on silver is very well known, and I've been a bull on silver for over a decade, and that's why I put together First Majestic Silver, obviously. And I think that ultimately we're going to see silver outperform gold, and we're going to see the ratio collapse to numbers that that I just suggested previously, and which will, I believe, will bring triple-digit silver. But I'm more excited about gold than I ever have been. I think and the difference between the move that we saw from 2002 to 2012, was a huge move from $250 an ounce to $1,900 an ounce. It was driven by a different phenomenon. It was this inflationary environment, this China coming to market, Brazil, the India, coming to market. There was this inflationary drive, that really caused everything to move. Oil prices went up, copper went up, everything went up, and it was obviously very exciting, and a lot of people made a lot of money. And but this move, we're starting to see some new buyers come into this market. We're seeing some very, very high net worth people starting to come into gold. Some huge institutions that didn't even touch the metal before are now advocating, that you have to own gold. I listen daily now to new people getting onto the gold story, and And I think that's going to change the dynamics of the metal going forward. And we got down to a low of $1,050, and if we have the same type of move that we did before from $250 to $1,900, that's going to give us $8,000 gold. And at $8,000 gold, what does that give you for silver? It's a couple $100 or even more. It's hard to imagine silver prices at those kinds of numbers, but it's not far-fetched to believe that can happen. And I think it's the best time to be investing in gold mining stocks, because gold mining or silver mining stocks as a whole outperform the metal by a factor of 2 to 3 to 1. So, of course, you should have physical metal, I believe, in your portfolio. I think everyone should have a little bit of silver, a little bit of gold. But at the same time, if you really want to make serious money investing in the sector, you've got to buy good quality stocks run by good management teams, like in the case of First Mining Finance and, of course, First Majestic Silver.
Keith Neumeyer, you can purchase shares of First Majestic Silver on the NYSE under AG, or First Mining Finance on the TSX Venture under FF, or on the OTC under FFMGF. Keith, thank you so much for